Initial jobless claims, that is the number of Americans filing new applications for unemployment, fell last week in a sign of stability for the labor market. While claims have been trending lower to start this year, Americans aren't necessarily feeling good about the state of the labor market, thanks in part to slower hiring. Daniel Zhao, who is the Glassdoor senior economist, joins me now to discuss this. Daniel, always a pleasure to get some of your insights on this. Just want to get your read through on what we've seen through jobless claims and the slower pace of hiring on the other end.
Well, jobless claims on an initial basis are relatively healthy. They're similar to where we've seen them in past years, but we do see that continuing claims is a little bit higher compared to where it was last year at this point. And I think that's consistent with what we've seen overall with the job market, where there's been this gradual cooling, there's been this gradual slowing down, and that's something we see in other data points as well, whether you're talking about JOLTS or the jobs report as well. And ultimately, this comes back to sluggish hiring. Even though layoffs might not necessarily be elevated on an economy-wide basis, clearly folks are finding it harder to get back into a job after being laid off. And I think that's what's keeping continuing claims elevated.
And so with this in mind, as we're thinking about some of the companies making the largest big cuts here, Meta, Chevron, Estee Lauder, among the companies who've recently announced some of those major reductions to their staff, what does the data tell us about layoffs so far this year versus how employees are feeling?
Mm-hmm. So we have seen that layoffs, especially in the JOLTS data, has trended upwards basically since around mid-2024. They're roughly in line with where they were before the pandemic, after spending much of the pandemic recovery well below where they were prior. But of course, it's important to remember that the average pre-pandemic was 1.8 million people being laid off on a monthly basis. And that's an enormous number. And that means that a lot of these headlines about companies initiating layoffs of thousands of employees, that actually doesn't really tend to move the overall number, because a lot of these layoffs are happening at some of these smaller companies, maybe some local businesses that are shutting down, but they don't get quite the same level of attention. But that being said, when we look at how employees feel about layoffs, what we're seeing is that there's an increasing amount of employee anxiety about layoffs on Glassdoor. So, for example, the share of reviews on Glassdoor that mentioned layoffs is up 5% month over month in January, and that's up 2% year over year. So we're definitely seeing a modest increase in how anxious that workers are about the prospect of layoffs and about the state of the current job market.
Yeah, and that kind of mirrored by some of the data that we've seen from the Conference Board in recent weeks as well, saying that 33% of the consumers in the present situation, at least conditions, they were saying that jobs were plentiful, but that was down from 37.1% in December. So that month over month decrease here is certainly noteworthy. I wonder what you're seeing in terms of the places that are still hiring, the sectors where there is still a need for additions to their workforce.
Mm-hmm. Yeah, so what we've seen over the last year or so is that industries like healthcare, or government, education, like these less cyclical sectors have really been the ones that have powered jobs growth. And so those are probably the places to be looking if you're a job seeker right now. Of course, there are some other factors that are impacting government and education hiring right now, but healthcare continues to be an industry that is growing. It's an industry that tends not to really be affected by business cycles in the same way that tech or professional business services might be. And I think it's always a useful reminder to folks that healthcare employers aren't just hiring nurses and doctors. They need IT staff, for example. They need accountants. And on top of that, there are also a lot of companies that serve the healthcare sector. And so those might be companies to look at that are still growing in the current state of the economy.
You alluded to what's at play within the government side of the employment situation right now, and whether that is some of the buyouts that have been offered and the extended severance, just the amount of workers that could be coming out of the government sector and looking for jobs in the private sector. How do you kind of estimate or run the calculus around kind of that conjunction or that crossroads that we could see, in addition to the existing private sector employees that are now looking for work?
I think, unfortunately, it's just a really tough question to answer, because there's still a lot of uncertainty about how these moves are going to play out, what gets challenged in court, what ends up getting implemented, and what timeline as well, right? So it's very difficult to project what the impact will be. If it's a sudden wave versus a gradual kind of a trickle, that can have a very different impact on the economy. And then I think it's also important to recognize that there are also some spillover effects as well, right? Because it's not just about people who are directly employed by the government, but it's also about organizations that get grants or funding from the government, or help support these services, right? And so there's a lot of potential impacts beyond that. But it also makes it very difficult to predict what some of these kind of cascading impacts might be.
Daniel, great to see you. Thanks so much for taking the time here with us today. Really appreciate it.
Thanks for having me.